Good evening and welcome back to another Talking Technical. And it's so nice speaking to you. And first of all, I don't know if a lot of you know him, but I knew him over the radio and I heard about him a lot. And I loved his shows was John Burke. So everybody loved John Burke's on 702 radio and many radio stations. John, just the best and all the best. And we will miss that voice. I mean, that voice was incredible. So let's carry on. And guys, thank you for showing some interest in the program because it is just you that makes this a success. So let's kick off with the first request, and that was Apple. Now, Wally asked about Apple. Now, Wally, first of all, I mean, this share was around $180 a few months ago. It went down as low as 137, and now it's flirting around 146. So it looks like there's some buying interest here. But Wally, you dropped me a nice email and you said, listen, Frans, can you maybe just show me I'm right. I want to know if I do see a inverse head and shoulder. Now, Wally, you're quite right. If I look at this daily chart and I want to show you, immediately I will draw the neckline in for you. And of course, if you look at that neckline, it looks like there's a perfect head and shoulder, but there's something wrong here. I want to draw this little piece in, and then you will know that you will see a proper head and shoulder, because what is the rule of head and shoulder? That the neckline, the neckline that is in place needs to be in such a way that you can see the proper right or the left shoulder. So there you are. There's the left shoulder, there's the head, and we're working on the right shoulder. And as everybody thought it can break to the top above that 149.90 level, the share lost some momentum and it's going down. And maybe we're working on another right shoulder. So one of the things to remember, if you look at charts, is that you can often see multiple head and shoulders with plenty shoulders. You can sometimes see 2, 3 head and shoulders in a row, but usually you see it in the shoulders where you've got multiple shoulders on the left side or the right side, and this is exactly what happens here. And we don't know if this is going to be a right shoulder. I hope it is, because if it goes below, and I just want to show you, if it goes below this little line there, there's the level. If it drops below 145.12, then maybe we can see even a lower low and even a lower right shoulder in the making. So the best is wait for the neckline to turn into a support that is above 150.70 before you buy. I don't know if you did buy, but if you do buy above 150.70, I'll make use of this stop loss. Let's make it at 145. And I mean, if the share goes up, and everybody believes that the Nasdaq will go up, and I can tell you, if the Nasdaq goes up, definitely they need to push Apple, because Apple is one of the big players in the Nasdaq. And if it does go up and it plays out and it reaches target, it can go to 159.40. But can you believe it? And we're talking about targets now of 159.40. Look where this share has been. This share was close to $185. So it just shows you that there was a lot of selling in the technology counters. And I just read this morning, some analysts say that the junior technology players, they are the place where you must invest now, not the bigger ones. But I can assure you, if you want to see the Nasdaq higher, these big boys needs to go up. Otherwise, the Nasdaq will not lift its head. Greg is asking about the Nikkei of Japan, and let's have a look at this chart. I mean, this is a daily chart. Now, usually on an index, I would love to rather look at the weekly or even a monthly chart. So I'm going to go a monthly chart and see how that performs on this chart. Now, if you look at this, I mean, the Nikkei had one beautiful rally. I mean, from 2012, I just look at that level was 8,626. Look where it is now, 27,943. And look what this chart is doing. Every time that there's a little bit of a tiny pullback, I'm going to show you. I just want to draw that line in there. It's not the proper resistance line, but I just want to show you. Every time that there's a little bit of a pullback, there you are again. Let's draw that line in proper. Every time that we see a little bit of a move down or a correction in the Nikkei, it's not far, then it picks up and it just carries on. And most of the indexes in the world is doing exactly the same. Now, if you look at this chart here, we may be on the brink of another leg to the upside. But on the other hand, if you compare the Nikkei to some of the other indexes, and I know sometimes it sounds a little bit weird, but eventually all the indexes almost follow each other unless one economy just get wiped out, like the Chinese started with regulations and all funny things. That index was under huge pressure now. But if you look at the Nikkei of Japan, and if it stays above 27,850, we can easily see another leg to the upside. Because what do we see here? We see a low, we see a higher low, we see a pullback, and then plenty higher lows again, a little bit of a pullback, higher lows again, plenty, and a little bit of a pullback. So let's see, maybe it's time to add on to the Nikkei. But we all know that their economy is all linked to the same thing that we've got. It's also inflation. And I mean, the index is rarely, not even, you can almost say not even 10%, 8% from its top. I mean, some of the other indexes like the SP500 only had a brief bounce last week, and they still, I think, 10 or 11% from the top. So, well, we'll see. But, I mean, if you want to stick to the Nikkei, I'm going to use a stop loss of 26,367. If it gets below 26,367, I'll get nervous. Otherwise, I'll give you the targets to the top: 28,902, 29,513, and maybe that magical 30,000 level is maybe on the cards for you. Well, we just talked about Nikkei, but Magda asked about the S&P 500. Now, I mean, I want to show you this monthly chart. Let's just show you what is happening here. First of all, I can remember a few weeks ago, we showed you guys this head and shoulder formation on the weekly chart. Now, it did pay out to the T. You can actually just use that little projection there. And let's put in another one there. You can see that it paid out 100% to the T. It went out a little bit lower. Yes, it was below 4,061. In actual fact, it was around 3,900 where the big guys started to support this index. But if you look at it, Magda, I mean, the momentum is still clearly to the upside. And yes, we can still see a relief bounce. I think we're not far from maybe giving us a beautiful leg to the upside. But while we're below this neckline, and that neckline sits at 4,380, I'll be nervous on the S&P 500. And the reason why, look at the long-term support line. And this is from 2008. And if I draw that line in, and remember, this is a monthly chart. This is not a daily or a weekly chart. And the reason why I'm taking a monthly chart here, because there's so many analysts every day just showing you that the S&P 500 can just go up. If there's a little bit of a negative here, it always turns around. It gives a beautiful double-digit gain, and everybody's just so used to it. But if I look at this, the level that I need to look at is maybe when it gets there. Can you believe that? That's the place where we will probably find support if it really starts to sell off. And guess where that is? At 3,067. And I just heard this week that the Bank of Australia started to raise their interest rates by 0.5%. Immediately I realized that's only standing at 0.8 now. So it's not even a 1% interest rate hike. I can tell you now, if all these big banks starts to raise interest rates, we can easily see a flow out of a bit of equities into interest-bearing instruments, and maybe we can head down to reach this level of around, let's call it 3,070. Mohammed is asking about Northam Platinum. Now, Mohammed, I mean, the Platinum shares had some beautiful rallies, and we've also seen that there was some ugly selling. I mean, can you believe it? It wasn't long ago when the share was 260 Rand. I mean, and look at this ugly sell-off. I mean, from 260 all the way down. And I mean, we're trading now at around 176. But for me, what's interesting here is the following. Mohammed, if I look at this, I see an ugly, there you are, rising wedge, and it's trying to sort itself out, and it looks like it's almost reached its target to the downside at 175. But for me, Mohammed, it's quite simple. If I look at the chart like this, and I see plenty lower lows, and I see a rising wedge right at the end, I will wait personally just for a little bit of a higher low. And I know you will say, Frans, but look at this line. I mean, it just shows you that there is definitely still some buyers around here, and they can support the share. And I just want to get you that level. There you are. And support the share while it is above 166.42, because that was the recent low. For me, I'm a little bit nervous. I will say to myself, I'll wait for a few higher lows to develop, and only then I will get in. Remember, there's two things that you need to think about when you're buying any platinum, for that sake, any commodity counter. There's always two issues. The one is the physical commodity price. Okay, maybe that is under pressure a little bit. But the big thing is the rand dollar price, because all these guys, they do some exports. They export their product, and they are just selling into the overseas market. Yes, we do a bit in South Africa, but most of it is priced in US dollar. And I think even some of the local manufacturers that wants to buy palladium or platinum or any of their products like the rhodium or whatever they produce, they will pay in dollar, and they will always revert it back to a rand dollar price. So for me, it's quite simple. Weaker rand, you need that. You need a good solid price in the commodities, and then you will look at buying commodity shares. And remember always, when the commodity counters looks cheap and everybody looks rosy and they just say these things can go up, that is the point where you need to be nervous. And for me, simply, it needs to get above 190.90 before I will get positive about it. Well, watch our website www.fransklerk.com, and we will chat again.